warm welcome to everyone. Thank you so much for coming. It's great to have you all in the room. I appreciate it. It's a bit of a hot morning. I heard the escalators at St. Paul's weren't working a minute ago, so we had some people arriving a bit sweaty. But thank you so much for doing so. Hopefully the aircon will help cool you down a little bit. So I hope breakfast was good as well. You enjoyed a bit of networking, and there'll be a bit more networking to do afterwards if you want to hang about. The session this morning will probably take about 30 to 40 minutes, depending on how many questions you have for us. So thank you so much for coming to our Emerging Leaders event. You might have been here before, our Emerging Leaders Forum. It's designed for mid and senior level property professionals. So what do we describe them as? Probably to say asset managers, associate directors, the type of property professionals who soon will be the leaders of their respective organizations. So one day fund managers, directors, chief execs, and I think that summarizes well the people in this room, people with that level of expertise and ambitions going forward. So the idea is really just to provide you with an opportunity to meet peers at that same level and hopefully grow together from there, and also to provide you with a bit of content, know-how, information that you'll find relevant for your day-to-day lives. So hopefully this event will be just that. That's why we're talking this morning about student property. And I just want to set the scene when we're talking about student accommodation, student property this morning. We're talking about the purpose-built student accommodation sector. So we're not talking about HMOs, private rented flats with rats running above your head when you're sitting in the basement. We're talking about the purpose-built sector. And why do we want to talk about the sector this morning? Well, maybe you've read some of these stats and figures in the press recently. 2017 has seen a cumulative investment value of 4.07 billion in this alternative real estate sector. So that's close to 1 billion more than in 2016, and apparently climbing steadily back to its record level in 2015 of 5.1 billion. And John Holley will talk to us a bit more about why this sector is so important. But just looking right now as well, in Q1 of this year, there's been already more than 1 billion invested in this sector. A number of new joint ventures and funds have been announced. There are new global investors interested to take a stake in this sector. And our event this morning has been very well received, so we thank you so much for coming to join us. And in light of all of this, I'm very happy to have the people on the panel that are here this morning. We've got Ruth Thompson in the middle from Tristan Capital Partners. We've got John Holley from Knight Frank, the student property team here on the left, and Marcus Weeks from Unite Students on the right-hand side. And trust me when I say, and you'll see this yourself, it's a fantastic lineup of speakers. So just between Ruth and Marcus, you're looking at representatives of firms with 22% of total capital invested in the sector in 2017. That's a fifth of the total capital invested in those two people. And John's representing a team from Knight Frank that's acted or advised on 49% of the total capital transferred in portfolio deals in the last 2 years. So people with a lot to say about student property, so I'm pleased to have them here with us. Would you like to join me in welcoming them to the panel with a round of applause? So just to give you a brief outline of what we're going to be talking about, it's really just looking at why student property is arguably having its heyday right now, what the investment and occupier trends are in this sector that you want to be interested in, what concerns, of course, there are both for developers and investors, and we'll also have a brief chat about what big opportunities lie ahead within the sector, but also in the wider real estate sector. So perhaps we could ask each of you to introduce yourself briefly, maybe your relevant PBSA experience. John, can we start with you, perhaps?
Sure. So I'm John Holley, work in the Knight Frank student accommodation team. Been at Knight Frank for the last 4 years now. Of that, 2 of them have been in the student accommodation team. So I deal with anything from site sale through to forward funding, through to an operational asset or a portfolio. So as Chris was kindly blowing our trumpet a little bit, but yeah, we are one of the big stages in the sector, and it's a sector I'm fairly passionate about. So that's me. Thank you.
So I'm Ruth Thompson, work for Tristan Capital. So good background on Tristan. So we are pan-European, pan-sector investment manager with about 9 billion of assets under management, of which 30% of that is in the UK. And I sit within the UK asset management portfolio team. So I'm pan-sector, so retail warehousing, shopping centres, developments, offices, and as of last year, student housing. So I'm a relatively newbie into the world of PBSA, given that we only bought our first student housing portfolio at the end of last year.
My name is Marcus Weeks. I work for United Students. So United, the largest purpose-built student owner of and occupier and developer. We've got about 52,000 beds now, so we're sort of double probably our next competitor down. But then again, being the market the longest, I think United started about 1991. I've been there for 18 months now, and I lead their site acquisitions and also do their development management of their pipeline. So as well as investing in the market, in forward funds and actual standing assets, we also do development to try and keep ahead of the competition. So yeah, that's me.
Yeah, thank you very much. And I'm shamelessly going to steal something I saw and thought was really quite nice from a BizNow event last week. I don't know if you ever been to BizNow. What they like to do is get to know the panel by asking them an icebreaker question. So my question to the panel is, what is your worst single experience of student living?
So I can go first. In my lovely HMO in Leeds, nothing like the stock that we sell, of course. We actually infamously had a saucepan full of, I think it was curry originally, out for sort of more than 2 weeks, which was infested by maggots. Everyone in the house was consistently blaming the other and refusing to clean it, so it ended up being a bit of a dirty protest. And yeah, it wasn't very pleasant at all. But it doesn't happen in our scheme, of course.
Thanks, John.
Well, similarly, also to do with wildlife, effectively. So we had what I would consider a pretty insane rat infestation during my 3rd year at university in our HMO, which involved having to walk into the kitchen equipped with brooms, because every time you opened a cupboard, you were no doubt faced with some tail running towards you.
Tasty, yeah, great. Marcus?
This was in Halls actually. We had a pretty strange lady who decided to live in one of the rooms next to us, and she strangely went with no reason, and the guys went in to clean her room, and they found like a glass box with a snake in it, and then so they cleared that, and then we a couple of weeks later, Becky, one of my housemates, found a Tesco bag full of mice, frozen mice that she was obviously feeding. So I don't know what was worse, the shriek or the fact that all of our food had been accompanied by 5 frozen mice for a couple of months. So yeah,
You can
it's
see
a bit
why.
strange.
You can see why purpose-built student accommodations having this heyday then already. Well, what we'd like to do is maybe just start with talking about some investment trends that we're seeing in the market. John's probably best placed to talk us through where the market has come from, where it's going. So John, maybe we can ask you to explain how the sector has grown, why purpose-built student accommodation is having its heyday right now. And I know you've got some slides prepared for us, so should we maybe swap slides?
Yeah,
and
absolutely.
Talk to them through it?
Fantastic. Yeah, well, I'd like to start by firstly thanking Chris for having us all along, and the guys at Maple Teasdale. Fantastic event, and great to see some friendly faces in the crowd as well. So as a bit of an introduction, I suppose you need to know who's in the crowd. So I'd like to ask you to put your hands up if you've had any interaction with student property, be it from a legal angle or from a transactional angle. So that's about 50% of the guys in here, so no tricky questions. So what are we talking about? Effectively, we look at it that effectively half the students in a given town, roughly speaking, want to live in HMOs. That's your what I lived in university. So quite often they're sort of slightly substandard. You're dealing with a sort of non-institutional landlord. Usually in the city that I was in, they're notoriously dodgy. This is the opposite end of the spectrum. So typically, the HMO market would be occupied by people like myself. So an undergraduate student, but from the UK originally. The other end of the spectrum, you've got the PBSA market. So that tends to be people generally doing postgraduate degrees or international students. So of the people who occupy the schemes that we tend to get involved with, a lot of those will be internationals. As a bit of an introduction to what the stock is like, this is sort of the first generation stock, which I suppose Unite would have been probably developing in 1999, as Mark has said. You'll see that it's typical of a university hall really, so it's loose furniture, relatively small windows, and I suppose not sort of particularly enticing by our standards now, but it had its day. I suppose moving on, people are starting to get a bit more sophisticated about how they're using the space. So generally it's a bit, bit more effective use of space. Larger windows, tends to be sort of fitted furniture and fixed to the walls, so the students notoriously love to move things around. Actually having your bed fixed against the walls tends to make life a lot easier. It's sort of moved from a single bed to now most of the schemes that we deal with tend to have double beds, and that's increasingly important for students. They all have, generally speaking, in the studio rooms, they'll have sort of an ensuite pod, or you'll deal with ensuite cluster flats, which tends to be sharing bathroom and kitchen facilities with 4 or 5 other students. And I suppose this is where we're at now in terms of the stock that is being developed. This is very much an example of the very prime end of this, the spectrum. So usually quite fun. So this is one up in Glasgow, developed by Tristan Capital, which has a slide in there, which I haven't actually had a chance to go down it, but I'd love to. They all have gyms. Often you'll find the really top-end schemes, which tend to be directed at the sort of international students, will they can have concierge service. A lot of them have cinema rooms. So actually, they tend to be rooms that I'm actually quite envious of, being sort of a young professional in London. They're really quite special. So in terms of where we are in the market, so student accommodation is very much having its day. I think if you were to look at the main sectors that I suppose on the Knight Frank yield guide that are seeing significant yield compression, the main ones would be data centres, logistics, and student accommodation. So we've gone from in 2012, where the market was about 1.2 billion, to now about 4.1 billion. And I think in the next few slides, I just want to run through with you what I think are the key drivers. So that multiplication of sort of 4 times. It's quite impressive. I don't think many other sectors have seen that in the last 5 years. So with that wealth of investment has come yield compression. So if you were to look from 2012 onwards, it's quite a compelling story, quite a pretty graph we like to put in our brochures. So at the moment, our prime regional yields, so when I talk about prime and regional, I'm talking about Russell Group markets. Investors tend to look at Russell Group markets because the quality of the institution tends to, in theory, replicate the quality of the tenant. People tend to look at multiple university towns, so the markets we're really looking at are places like Bristol, Bath, Manchester, Newcastle, Birmingham, and it's really a supply and demand in our sector is critical. So we tend to look at how much stock is being developed, how much the pipeline is, because you're fundamentally letting someone only on a yearly tenancy. So if you don't, for example, with an office, you have 5 years of secure income with probably quite a strong covenant. Effectively, your covenant is with directly to a student, and the guarantor is their parent. So certainly not institutional. So what's driven that yield compression? I suppose the attraction to a lot of investors, such as Ruth, is the fact that rental growth has been roughly tracking RPI for the last 5 or 10 years. Depending on different markets, you'll see different growth in different markets. Also, in terms of the room type, you'll see different growth. So, as you'll see, last year, the ensuite rooms, so that would be, say, I would rent a room and then share kitchen facilities with, say, 4 or 5 other people. That's achieving the healthiest rental growth of 2.75%. But overall, roughly speaking, it works out to roughly track RPI, which I think in a sort of slightly volatile macro economy, people are looking at student accommodation as sort of a resilient sector to any sort of wider macroeconomic shifts. So as I said, international students tend to be a key party that actually participates in our market. You'll see that international students have steadily increased for the last 10 or so years. Of that, interestingly, I think one question that we always get asked is, what would be the impact of Brexit on the student accommodation market? Interestingly, only 6% of the students at UK institutions are actually from the EU. So a lot of the market will be people from international sources other than the EU. So the biggest opponents that would be China and the US. The reason that the Chinese market is so important to the BBSA sector is because they tend to be able to pay the highest rents. To the Chinese students as well, also getting an English-speaking degree has a bit of social capital to it, so it's something that is very much on their hit list. Why is the UK important? I suppose the critical point being that we are number 2 in terms of the number of top 50 higher education institutions in the world, second only to the US. But then if we look at the cost of what it actually costs for a student to study here, Australia, Singapore, South Korea, US, UK, we're number 5 on the list. So although Australia is closer to, in theory, the target tenants, which would typically be from India and China, we're actually quite a compelling argument for an English-speaking country with a relatively cost-efficient cost of studying. So who are we selling to? So of the market last year, as we said, there was 4.1 billion transacted. So that would, I think, looking at this compared to perhaps in 2012, we're now at a stage of sort of consolidation in the market where there's big operators like Marcus, like Ruth, who are ultimately either buying big portfolios from developers or in a state of consolidation where they'll be either disposing of stock that doesn't quite fit with their investment strategy. And I think if you were to look at how that spectrum of investors has changed since 2012, we're now getting increasingly institutional and increasingly international. So I think there's a huge wealth of capital from Asia and the Far East trying to get into the sector because, as I say, the fundamentals are very strong. So who are the parties that we deal with? I like this graph because it shows IQ and Tristan. So IQ did one of the biggest deals last year where IQ is a JV between the Wellcome Trust and Goldman Sachs. So they bought a portfolio from Letter One, which is a consortium of Russian investors, which is the biggest deal of last year. So a lot of that 23% that they made up was from that big portfolio. Number 2 on the list is Tristan, so Ruth. Again, I suppose talking about the trend of that we're seeing in the market where big developers, in this instance is Downing students, who are one of the more prolific family-based developers in the sector, effectively looking for either equity for a source in a sort of JV or actually disposing. So I think that was all project-based last year. So you can't see it, frustratingly, but that's Brookfield's second biggest buyer. And the rest of them, there's a bunch of listed REITs which are student-specific in the UK. But this is sort of a list of people who participate in the sector. So you've got everyone from institutions to family-run businesses. So you've got Singaporeans are very much looking at the sector. I suppose the interest as yet from the Far East, I suppose if we compare the student accommodation sector to say offices and retail, which quite often you'll see in Central London, the really prime schemes will go to Chinese buyers. I think in our market it tends to be only really Singaporeans from the Far East and lots of sort of American equity. But that's sort of my brief Student Property 101. I think we're going to now move into a question phase, which I'll let Chris introduce us.
Yeah, thank you very much, John. I thought that was particularly interesting, talking to us about where the sector has come from and giving us some insight as to who the players are. John, if you wouldn't mind, I want to carry on that line of questioning a little bit. Jana, would you mind getting the screen up for us and we can just get a bit more acquainted with each other? Yeah, why don't you guys shoot me along a little bit? Fantastic. So you've talked a little bit about the investment volume, what's come into the sector. I wonder if you can tell us how that compares to other asset classes and also the yield differentials between those various classes. So why are we saying this alternative sector is really quite a compelling story?
So I think on the first point, so student accommodation made up 6% of the wider commercial property market last year. Where that places us, I think the healthcare market was 3.1 billion. So we transact more than the likes of healthcare, but less than hotels. So I think hotels last year transacted 10.1 billion. So in terms of where we are increasingly seen as an asset class of our own, as opposed to part of the alternative sector. In terms of the yield differential, the natural one to compare to would be PRS. So student accommodation has been around for longer than PRS in sort of BTR market. If you're looking at prime central London for student accommodation, as I've got on my slides, we'll be talking about roughly 4.25%, 4% for a prime operational scheme. Whereas for a PRS scheme, you could be close to 3%, and that's partly to do with the operational costs involved with running a PRS scheme, the fact that the units are larger, but also due to the wealth capital that's trying to get into that sector, because it's certainly seeing a lot of interest from, I suppose, being a fledgling sector. I think a lot of people are trying to pile money into it at the moment, whereas I think our market sort of, the growth has been a little bit more steady, and we've seen a sort of gradual yield progression as opposed to weight of capital piling in at one particular stage.
Yeah, thank you, John. Very insightful. And talking also about what types of buyers there are, you've mentioned Singaporean money coming in a lot. What types of buyers do you see in terms of their background, institutions, private equity money, and why do you think those types of buyers are now interested in this sector?
So I'd say there's a little bit of a change in the sector, that the market was historically dominated by UK listed REITs or student-specific funds. I think now we're seeing increasingly high net worths from Far East, or experts such as Tristan, who are very well known on the wider commercial property sector, but looking for sort of an equity share with someone like Downing, who are prolific in the sector, been doing it for the last 10 years. They sold 3 portfolios now. I think there's definitely a tangible demand from that kind of investor who, they know the wider commercial property market, but I think in terms of creating a solid investment, they're trying to do it perhaps in slightly an indirect way. So be it investing indirectly in people like Unite, or Tristan providing an equity share as it did with Project Base last year.
Well, that takes us neatly over to maybe asking Ruth some questions about Tristan's investment into the market. And I wondered if you could tell us a little bit about the fund that you were working on, why they felt this sector is something they want to get into, so maybe the investment criteria you had to meet, and then maybe tell us a bit about that Downing portfolio, why that was particularly attractive to you.
Okay, so the project that we bought last year, it sits with one of our E-Series funds, which is an opportunistic fund that invests pan-European and pan-sector. And I think from our perspective, it offered very good risk-adjusted returns and also good diversification on both a geographic perspective. It was in the UK, and we had a lot of continental Europe assets sitting within that fund, and also sector-wise. So it was student, and it was the first student housing portfolio to go within that fund. And then to go more into the actual portfolio and the way it operates. So the way Tristan runs its business is we don't do the day-to-day asset management. We align ourselves with operating partners. So be that shopping centres, we're with the Alandi team, retail warehousing with Sales Investment Management. So we align ourselves with who we deem to effectively like best in class or top in class within that sector. So for us, Downing was a compelling story. They're one of the top developer operators within the market. So that gives us a lot of trust to sit behind a portfolio and sit behind an operator. And then the portfolio itself made a compelling story. So I think John touched on quite a lot of these things, but it was located all throughout the UK, and the locations were dual university towns, so they're quite defensive, and also were underpinned by Russell Group universities. So that you're not going to be hit in the same way that maybe if you've only got one university or you've got lesser performing universities, they're probably going to be the ones that when student numbers start to decline, they're going to suffer. And also within the actual markets themselves, they're prime located assets, often the place where their students want to live, and also some of the better stock, as in, John put up some of the true student stuff. That's not quite what our stock looks like, but we're up there with some of the top spec in the market. And when students are deciding where they want to live, and stock dates quite rapidly, I think, and you guys are seeing that sometimes in your stock, that actually you want to be one of the the coolest and the best performing stock on the market. So those were one of the key reasons we went in. I think the final one is also the liquidity point of view. So the amount of the volume of capital that is coming into the market. So John went through that slide showing just the range of investors that are coming into the market, and also the actual volume that gives us some certainty of liquidity at exit. With other asset classes, you don't necessarily have that benefit at the moment of knowing you can easily sell it. You might be able to sell it, but it might not be at the price you want to sell it. So I think that's another compelling part to why we decided to enter the market.
Thank you, Ruth. Maybe just to set the scene for the rest of the room, that was a £440 million investment into the sector. But what I found very interesting, Ruth, if I can ask you, it's about the type of deal it was, because John mentioned it was an equity deal, wasn't it? So I wondered if you could tell the room why you felt that was a good way to get into the sector, by buying equity in.
So it's a JV with Downing, so we put in it, there's also leverage on it as well, but it's a way we typically, when we invest in the capital structure, we tend to be the equity. Occasionally we do the mezz slice, but given the risk on this portfolio, it seemed that equity was going to be on a risk rate adjusted basis the best way to enter the market.
Thank you so much. Marcus, maybe you can tell us, how does that affect a developer occupier, this wealth of interest in the market? What have you seen happen to Unite students?
Yeah, so for us, I think we've benefited greatly. It's as Unite being the largest student-related REIT, so there's not very many of us. So we've benefited sort of on the back of the interest that John and Ruth are talking about, but you've also got the man and his dog side of it. So as well as the likes of Schroders and CBRE GI, who all invest in Unite, you've also got the public, and Unite has sort of worked on the back of that as well. So I think the main one being the share price. It's gone up quite a lot in the last 6 years, I'd say. So we've benefited sort of hugely from that. We've also got a portfolio on the market at the moment, which again supports that strong weight of interest. And for us, Unite is very much we're trying to angle our development pipeline and a lot of the investments that we're buying now into longer term deals with universities. So the strategy is better locations, I suppose, high-end locations, and then aligning ourselves with the various higher education institutions. So we've been on the block for about 25 years, so we've got the best relationships out there, so that enables us to do that. And then the support that our investors are giving us is enabling us to raise that money. We raised about 170 million in May at a record discount to share price. So it very much supports it a huge amount, and I think we're all benefiting from it one way or another, which is really good.
Yeah, thanks, Marcus. That was in the papers just a fortnight ago. 170 million share capital raised. Was it 9.2% of share capital was placed? So that's very interesting. And I remember looking as well. You're currently trading at above net asset value if the share price.
We are, yeah. We're a good premium. So being a REIT, we're now valued on our income rather than our sort of property value. Which means that providing you're strong and you're supported, then there's no reason why you can't trade at premium. There's only a few property companies trading at premium at the moment, so it's a really good place. I'd say as well the share raise was due to raising the money for specific projects that we're working with the big institutions. So it kind of gives us that competitive edge in quite a competitive market.
Yeah, thank you, Marcus. King's College was at an Oxford Brookes, so it's fantastic. Deal there. Thank you. So I wondered if we could maybe stay with you and you can tell us a bit about the occupier trends that you're seeing. So maybe a bit more about what the target demographic is for the stock that you're delivering, what kind of spec you need to deliver to accommodate that demographic.
Yeah, sure. So it's changing a huge amount. Domestic students tend to broadly prefer the more en-suite product, which is where Unite tends to fit in. So you've seen John's graph earlier. Obviously, a majority of the 1.8 million students are domestic. Unite targets that sort of mid-range level, so we don't build bells and whistles. We don't actively try and put pools and all sorts in our buildings, but we do a very good, great value product, and that targets the biggest amount of the market, which obviously helps our strategy. I think you'll find that the internationals will prefer studios, which are a bit more kind of higher risk to us, particularly in sort of regional towns. And I'd say the spec has definitely upgraded as the market has got a lot more competitive with new entrants coming into the market. You do see, and sort of not just the likes of Tristan and Downing, but also Joe Bloggs, the builder in Derby, who decides to put up a 100-bed student residence, and you're dealing with all sorts, and it's about keeping ahead of the game. So we do a lot of insight work into all of our students. So we do really in-depth surveys to establish what they use, what they don't use, and as a result we can tailor our spec and what we're building on the sort of 4,000 or 5,000 beds a year to make sure that they're exactly in line with what the market wants. But it's definitely raising the bar.
Thank you.
Yeah.
Thank you. Very interesting. So, and then talking then about the trends that you might be seeing in this demographic, can you see what might be coming ahead in terms of shifts in that demographic or increases?
Yeah, in terms of the actual demographic, interestingly, student numbers are actually going up. They're still on the rise, but 18-year-olds in the country are actually decreasing until 2021, and then it will start rapidly rising again. So it's interesting that we're still seeing record numbers of students going to university, and actually a smaller proportion of people the age to go to university. What we're seeing is students are becoming less like students, they're more like consumers. So brand is now a very big thing, and it's not just on the back of competitiveness, it's the way young people now are working and engaging and communicating in social circles. So that's the big one for us, is actually treating them a bit more like adults, to be honest, and engaging with them and working on what they want. So yeah, I'd say that's probably the main one for us.
Very interesting, thanks.
Yeah.
And just to add to that, he was talking about UK students, weren't you, the 18-year-olds. I was reading that the applications are predicted from Chinese students to double by 2025. So I think at the moment they stand at about 60,000 or so applications from Chinese students. Papers are saying that will increase to 120,000 within the next 6-7 years. So that's a significant shift in the type of people that you're saying will be paying the premium rents on these accommodations. So that's a very interesting development in the occupier market. I suppose I'm wondering if we could also ask you about development and how you've seen changes in the viability of development, the issues you might be facing as a developer.
Yeah, sure. I think you've got to kind of split up the regions in London now in terms of development. There's a lot coming forward generally, more so in the regions. Some markets are very, very competitive now. I'd name sort of Sheffield and Liverpool as two particular ones as examples where the likes of every man and his dog has been able to, within reason, get sites and be developing, which has meant that the headroom, which is sort of your total students, take off the people who are either living at home or aren't in the market, that headroom has just got smaller and smaller, which means that it's more harder to let your product, which ties in with our strategy of obviously working with universities. And as a result, you're sort of, with increased supply and the headroom, you're getting tight for development in some of these markets. So that's obviously a huge viability issue. We run appraisals pretty regularly in a way, and we'll get negative land values sometimes now in some of these cities. So we're very much steering away from them. I think from a viability point of view, London's really interesting at the moment. Because it's a pain in the ass. You've got the new London plan coming through, which is the mayor's sort of ideal way of things moving forward, that will be adopted next year, and that is looking for a large percentage of affordable rent. So where previously, as most of us will know, there's residential, which has to have a proportion of affordable units. It's now swinging into students, so they want to see a level of affordable rent around sort of 35% mark. And with residential values coming down in London, Unite and other student operators are now more at the table, but I think we're going to see more challenges behind the affordable rent point coming in, and how that impacts the viability, because the long and short of it is we have about 230,000 students in greater London, and we've only got about 80,000 beds, so there's a huge supply shortage, and it's about making it clear that there is that demand there, and we need to get these through. We're not necessarily going to get them through with quite a chunky affordable rent percentage like that.
Yeah.
So yeah, that's sort of the main point behind London.
Yeah, thank you. And affordability is a really big buzzword really in the sector. It does really put strains on the development viability. But another thing that you mentioned in terms of the London local plan is that any purpose-built student accommodation development has to have a university backing that deal, and often people might not know how deals are structured in the purpose-built student accommodation sector. You might have heard nominations agreements, you might have heard soft and hard nominations agreements, direct lets. John, would it be appropriate maybe to ask you to just explain to the room, you did a 101 earlier, maybe a 101 on the leasing structure and exactly how different types of purpose-built student accommodation structures are delivered?
Sure. Okay, so typically what I'll deal with day to day will be direct let schemes. When we talk about direct let, that will be an agreement either with the landlord themselves or with a third-party operator who will effectively sign the student up to a lease, usually for either 44 weeks, i.e. the whole of term time, or 51 weeks, which is the whole year. The preference usually is 51 weeks, but it's really about supply and demand, I suppose, as to what you can get the student to sign up to. You sign up to a 44-week lease, which is just term time, and depending on what's in your section 106, you can usually let the scheme out to language school students throughout the summer, and you can let them out to be conference delegates. So actually, in some markets, that's now becoming a big way of people sort of pumping up their GOI. Effectively, in places like Edinburgh, you've got the Fringe Festival, where students can be let out to actually attendees of that. Quite an interesting way that some of the savvy people in the market are very much trying to sort of bolster their income. The other end of the spectrum, you've got nominations agreement, which effectively there's two types we talk about. Broadly speaking, so you've got a soft nominations agreement, whereby effectively you have an agreement with the university that they'll promote your scheme on their portal to their students, which is, I suppose, more of a marketing package for you as opposed to a solid agreement with them. A hard noms looks a little bit more like a lease, or actually if fundamentally you don't fill up the rooms, the university is still liable to pay the rent. It won't necessarily be the whole scheme, which is let on nominations or a lease. It can be a proportion. But as you say, in London, typically people are looking at signing up to a lease. So the value of signing up to a lease, I suppose, is you'll see significant yield compression. Usually the university will want to see a bit of a discount on direct let rents. So typically that would be 10%, or that's varies from city to city. It's all part of the negotiation. The market for sort of long income deals, the longer really and the more favourable the terms of the lease with the university, the better it'll trade. So universities don't tend to go bust because it's quite a strong covenant strength. So that's a really strong market at the moment. If you've got a prime London operational asset with a lease to say UCL or Imperial, that'll trade fantastically well at sort of sub 3% yields. I suppose that's a bit of an introduction to what we deal with.
Thank you. He had to talk me through some of that, so I found that very interesting. I hope the room did too. But Ruth, I imagine looking at it as an investor, or at least having to report back to investors, analysing that structure isn't too easy. So I wondered how that changes your day job, looking at a student accommodation portfolio compared to your other portfolios.
Yeah, so it was a bit of a steep learning curve when I first moved into student, because I was typically working in office leases where you get like a 10-year lease with a break of 5, or retail where you might get a 5 and a 3. So it was quite different to sort of get my head around the fact that actually in a direct let scheme you're only getting a term certain, like your WALT is often less than a year, and to try and communicate that back to investors was quite difficult, because we report on a quarterly basis, and if they see that your WALT for an asset is sub a year, some people start getting a little bit twitchy. So it was quite a big educational exercise to say, look, actually we might be below a year, but it's all about stability and like velocity of reletting. So at the moment we're currently leasing up our portfolio for the 18-19 academic year. We're already like over 90% pre-let, and it's about being able to prove that to investors. So it's although our WALT's less than a year, look, going ahead for the next year we're already 90% pre-let, and then you look back at your historic like occupancy rates, and if you're sitting at 98% on a year-on-year basis, then you're kind of pretty comfortable. So it was quite a big way to try to explain that to everyone, because everyone was always thinking, oh, why aren't you getting a longer term certain? So John and his team, when we're trying to educate ourselves and we're buying portfolios, did a good job of trying to help us understand exactly what it meant. So we have a real mix across our our portfolio. We've got 10-year nominations agreements in place, some we've got 3-year noms, some as well we've just got direct lets. And I think, John alluded to it, is like the yield differential. So what you might lose in rent on a nomination scheme, you're going to get back maybe even more on the yield depending where it is. So we've got a real mix, and that makes us again quite comfortable. We're not nervous about having the shorter term WALTs on some assets.
Thank you, very interesting. And Marcus, can we ask you, how do Unite set things up on the structuring side?
Yeah, I mean, for us, as I said, it's more kind of focusing ourselves with universities. Of our 50-odd thousand beds, we've got about 60,000 with universities, so we very much kind of look at that, and that's sort of how we're based. We're on the FTSE 250. We've got to be seen to be looking at kind of as secure income as we can, and the either the solid direct let markets or the universities where we're getting a lease or a nominations agreement are the markets we can get that and give that secure income to the investors. So it's very much what we focus on.
Thank you, guys. So maybe we'll just do a little look ahead. Perhaps we'll ask the investor and the developer what kind of concerns you might have had to address as part of your sort of investment into the sector. Ruth, can we ask you, if there are any concerns, what would you say those are for the sector?
Well, I think one of the big things that always comes up when we invest in the UK is the B word, is the Brexit word. It's like how are you guys going to be prepared, and how are you going to mitigate any risk that comes from that? But the slide that John put up saying where all the students come from, 50% of our students in our schemes are from China, and that's only going to increase. So that for us was quite a good hedge within our portfolio against the Brexit risk. And I think another thing, and Marcus is probably better placed to talk more about this from a developer standpoint, but is the future proofing and making sure that your assets are fit for purpose, not just now but down the road. You don't want the biggest fad now in your schemes, which might look great for like 2 years, 3 years, but come 4 or 5 years down the road, is that actually going to be what students are looking for? The way that we interact with our built environment changes quite fluidly, so you need to make sure that what you have is going to stand the test of time. So I think we looked in operating with Downing to again de-risk ourselves with someone who's got a proven track record in developing and operating the market for a number of years.
Thank you, Ruth. Marcus, what would you identify as sort of concerns for you from a development perspective?
I think for us it's potential Labour government could be an issue for us. Rent restrictions. I think the affordable rent as well, if that's rolled out not just in London, which it currently is, but if it's rolled out regionally, that could have quite a big impact on some really good regional markets for us that could dampen viability for what is required as a structurally undersupplied market in particular locations. So they're our main ones.
Thank you, Marcus. We don't want to leave a negative thought, so we're going to get maybe John to say, how would you counter those concerns? Would you tell the room it's still a good time to invest in PBSA, regardless of what the others have said?
So yes, it is, by the way. So I suppose on the Brexit point, we always talk about the sector. Big buzzword in the sector is that we provide a Brexit resilient income stream, which is definitely agent speak. But somewhat, to some extent, that's true. If you look at the sort of big macroeconomic risks, we're talking about occupiers wanting to leave the city, move to Frankfurt, and that's quite a big sort of looming, what form Brexit's going to take is sort of looming over the back of most other sectors. So our sector, interestingly, we sort of work off the back of the quality of UK institutions. If you look at the growth in student numbers, it's fairly stable. The number of students doesn't grow at this. There's development as well. There has been a lot of development in recent years. So some markets are approaching what we perceive to be saturation. But with that also comes something that was developed, say in the sort of late 90s, which is now becoming sort of slightly unfit for purpose, and is actually ripe for redevelopment. So a lot of developers just kind of cottoned onto that fact. In terms of the development viability, I suppose one thing I would mention is with certain markets becoming increasingly difficult to develop in, owning operational stock there, you're in a pretty good position. So London, although the big boys like Marcus are still able to develop in prime central London, the rest of the market isn't. So if you bought assets in London or markets where it's going to be increasingly difficult to develop, as Tristan have, I think you're actually in a very strong position because you've effectively future-proofed your rental growth. And as Ruth said, you also bought future-proof product. I think the markets that will perhaps struggle are secondary institutions, single universities, so sort of non-Russell Group markets, and then schemes that are not built in prime locations. So typically students want to be somewhere between the bars and the university because fundamentally generalising, but students are a little bit lazy, so they like to have a short university and a short walk home from the pub. So I think the schemes that might struggle going forward in terms of occupancy will be the ones that have sort of benefited from a wealth of cheap land in these markets like Sheffield and Coventry, for example, which are in a fringe location. Those that are in the best location in town and provide the best product, I think going forward will be a very strong investment, which I think Unite are very much in a consolidation stage, focusing on exactly that sort of core product. And Tristan have bought a portfolio which has been developed by some of the best developers in the market in fantastic micro locations as well. So I think there's still very much opportunities to be had.
Thank you, John, for a positive spin. I'm just going to ask a final question to the three of you about opportunities ahead, the next big thing. Marcus, can we come to you as a developer, occupier? What do you think is the next best thing for you to be looking at?
Yeah, sure. I think it's probably a more natural movement. I think for us is looking at the kind of co-living PRS market. There's a lot of chat about it, as I'm sure most people in the room will know about. It's a different product for us, and it's a different target. We're a student accommodation developer, so for us, I think that's a big opportunity. Is in general in the market and it leads into John's future-proofing point. You're developing potentially for this new wave of development that we might see. So can Unite develop products that potentially could have postgraduates, not just postgraduates, sorry, but people who have finished university. So could you move to a Unite or a Tristan style accommodation for a couple of years after you sort of finish university? I can personally see it. I think it could work really well. So I think that's certainly something we'll see on the horizon over the next couple of years, particularly in markets perhaps where you've got a lot of saturation, where you perhaps can't fill your rooms. So what else could you do with it? What are the other options? With that, though, there's planning challenges. There's different uses. There's different room size requirements. But I think once we've got over those kind of hurdles, then that'll be an interesting avenue for the student sector to start exploring. And you've got all the teams there, everyone's ready to go. You've got the capital, you've got the teams in the companies, so should theoretically be a pretty easy transfer. But let's see what happens.
Thanks, Marcus. Yeah, thank you, John. What would you say, sort of next best thing, whether within the sector or something different?
So I think in the student accommodation sector, there's a few frontiers that we're very much looking at from an agency perspective. The model that's been very successful in the UK and seen fantastic rental growth and growth in investment, as we've seen in the UK, is fairly replicable abroad. So the likes of Australia and Europe, a lot of European institutions are now offering English-speaking degrees, I suppose in order to try and capture some of that interest from international students. I think our market is fairly sophisticated in terms of the data, etc. we have. So with the fact that you're letting to a student for only 1 year, you'd have a WALT of less than a year. So with that comes a focus on supply and demand. So fundamentally, it's back to the very basics. We are very good at that in the UK. We've got great data. I think in Europe and sort of internationally, the data is slightly behind ours. And there's no reason, I suppose, why the sort of bigger guys out there and the sort of people who have developed in the sector in the UK can't replicate that abroad and I suppose go and capture market share.
Yeah, thank you very much, John. Ruth, you said you're pan asset at Tristan. What's your next best thing, perhaps outside the alternative sector of PBSA?
Yes, I think it goes without saying, I think we are looking at doing more student, both UK and also building a platform within Europe. But looking outside PBSA, so I'm not sure if you guys have heard the buzzword, but retailistics, which is the new thing that's going around. So it's sort of a hybrid between retail warehousing and logistics. So it brings in that like last mile delivery element. So at the moment you've We've got a bit of a structural change going on within the UK retail sector, be that through CVAs and the tenants just disappearing, and actual just the fact that the stock is maybe not suited for purpose, not the way it used to be. So we've got a lot of retail warehousing whereby, it's pretty well connected when it comes to infrastructure and transport wise. And if it's not a fashion park, if it's like maybe more bulky and discount led, then you're going to have pretty low rents, and rents that in some places are sort of falling off a cliff, and you're getting to sort of late, £10 a square foot. And then you can become a bit more competitive when it comes to industrial space. You create this sort of hybrid distribution at the back and sort of front-facing showroom of retail at the front. And I think you're going to increasingly see is some of the retail warehousing stock tries to consolidate sort of a more hybrid use for that last mile shopping.
Thank you. I found that interesting. I hope the rest of the room did. So if you did, perhaps you could thank the panel with me. Paul Burke, my partner here, will just say closing thank yous, and we'll be able to go for coffee next door.
Okay, well, thank you, Ruth and Marcus, and everybody for coming. I'm sure you all found that as interesting as I did. Reassuring for me that my teenage son can have a double bed when he gets to university. As Chris explained, the background and purpose of the Emerging Leaders Forum, these sessions are an important part of that. We hold them regularly. Next up is a session after the summer on rules, regulations and sustainability, so check your inboxes for that. And as Ruth mentioned, CVAs, we're also running a CVA workshop, client-specific thing for clients or contacts, so if anyone's interested in that, then do let us know. We can sort something out there. In terms of the forum itself, please tell your colleagues, tell your friends, tell us. Feedback's very important as well. So we'll be in touch after this event with an email, the form you can fill in, and let us know if there's any way we can improve this format. If there are any topics that you'd like to hear about, or any speakers you think you'd like to hear from, then do let us know. And with that, I think, yes, again, thank you to our speakers, very interesting, and tea, coffee, and the remnants of breakfast next door for you to hear about if you'd like to.